What a terrible day, what a terrible week. Everything is going down. Some meme coins are down more than 50% in the last 7 days. The question is, does it make sense to buy now when everybody is fearful? Everybody calls that the Bitcoin top has already been reached, that now is the time to sell if you haven't sold yet. But does this really make sense? Now, among the top 100 cryptocurrencies in terms of market cap, the largest loser is Pudgy Penguins. And there seems to be a pattern. It seems to be large caps and especially tokens that have been discussed a lot in the past and that have rallied a lot in the past that are now down the most. Almost everything in the top 100 is down except Fartcoin. Fartcoin is slightly up, but does it make sense to fall for this trap, to buy now this one single outperformer just to then get dumped on tomorrow or the day after tomorrow? Now, I'm not that surprised about this move. We talked about a short of this asset here in premium. So that was when we saw a massive pump. Now we are down 30%. And I've also opened a short in this asset here. That's making quite some gains with this crash as well. But there are some things that are somewhat unusual with this crash. And that is the magnitude and how quickly it came. Have a look at this chart here. This is the others dominance. So this looks at all of crypto that's not in the top 10, so excluding the top 10, and it measures the market cap of those cryptocurrencies relative to all of crypto. And over time, we see more and more adoption of altcoins. That makes sense. And we also see how there's some kind of a trading range and how that trading range is narrowing. But with this recent crash, we're even falling outside of that trading range. In other words, altcoins are now historically cheap. Are we going to break this year-long trend, and are we going to see the complete collapse of the alts? Only time will tell. Now, what's very interesting is that this crypto crash has not been caused by a lot of people suddenly withdrawing from the system. So it's not like many people are now converting their tether into fiat to then withdraw this into a traditional finance system. No, it seems like people just swap over to stablecoins, but they're not yet withdrawing this from crypto. Because have a look at this. This is the stablecoin dominance. So how much of all of crypto is in stablecoins? And this used to be in a pretty tight range in the last 2 to 3 months. But now with this crash, a lot of people are getting into stablecoins again. In the last 2 weeks alone, the stablecoin dominance has risen by 25%. While at the same time, the stablecoin market cap has barely changed. It tends to rather trend upward. Now, the stablecoin market cap measures directly how many stablecoins get minted versus how many stablecoins get destroyed. Stablecoins get minted not through swapping activity. Stablecoins get minted when you deposit your fiat currency, for example, to Binance. Then Binance sends this over, for example, to Tether, and Tether then holds custody of those fiat funds and then issues the tokens. And the same is true the other way around, right? When you're withdrawing your money from the crypto system, you want to get fiat out, then that fiat is sent from Tether to Binance, then to you. And when money flows into the system, the stablecoin market cap is going up. When money is flowing out of the system, the stablecoin market cap is going down. And the stablecoin market cap is not yet going down. However, people are swapping out of risky tokens into the stablecoins. So this is all just short-term panic, apparently. Things are deleveraging, but the overarching trend hasn't really changed yet. It might change, but it hasn't changed yet, I believe. Now, times like this are very, very scary because the average cost basis of the market is way below the current price. And sometimes we do go below the average cost basis. So whenever the average cost basis of the market is above the current price, when the average market participant is in losses, that's historically the best time to buy. Unfortunately, those kind of moments only happen every 3 to 4 years. Have a look at this. This is Bitcoin's realized price. And at the end of every crisis, we tend to fall below the average cost basis. So that's then when the sell pressure subsides. That's then when people aren't in profit anymore. And it's only the dollar cost averagers that continue buying in and stabilize the price at one point. If you believe in Bitcoin long term, then you can wait out the bear markets. And that tends to happen when the market in aggregate is in losses. And this is what makes this current situation so scary, because the average cost basis is at 42,700. The market still is more than 2x in profit. And there's even a more grim way to look at this. If we just look at the long-term holder realized price, so the average cost basis of the long-term holders, we also tend to see that at the end of a bear market, we go below that. And unfortunately, that price is even lower. It's only at 25K. Now, I'm not saying that we're going down to 25K tomorrow, but I am saying that at some point, more long-term holders might also realize profit, and this might go up. And then somewhere we might meet in the middle. Besides those scary scenarios though, the very, very long term, right? When we zoom out, when we look at the next 4, 5, 6 years, that still seems to be very much bullish because money is still flowing into the system through the Bitcoin ETFs, right? We do see money flowing in through the stablecoin market cap, but we also see money flowing in through the Bitcoin ETFs. 6.8% of all of Bitcoin is now held through the Bitcoin ETFs, and we see an annualized supply absorption of 7%. So 1 year from now, if the purchasing stays at the current rates, the holding by the Bitcoin ETFs will more than double. And the trend is relatively constant, right? More and more of Bitcoin gets scooped up by the ETFs. There is rarely net selling happening. But that, of course, it doesn't protect us from the cycles, especially when the long-term holders take profit. But I don't think that the current crash is actually caused by the long-term holders. We see the ETF flows in green, right? They're mainly positive. And we see the long-term holder outflows and inflows in blue. And it's the long-term holders that really dictate the price movements. They tend to sell when Bitcoin hits new all-time highs. They tend to buy when Bitcoin is pretty low. And they have stopped selling, right? They took quite a bit of profit at around 100K, but they have stopped selling now. So this current crash does not seem to be a sudden awakening of old coins selling. Yes, Bitcoin supply is pretty high, and that tends to be a bad sign because we tend to top out whenever we've got a lot of Bitcoin floating around. But this current correction, it seems to be mainly deleveraging. Have a look at the Bitcoin open interest, especially the options market has seen less and less interest, and that leads to lower prices as well because of hedging by the issuers of those options. Trading activity stays high, but the question is how much of that is actually natural and how much of that is potentially bot manipulation, maybe through the meme coins. And so that's why it's so important to always look at the macro, to always figure out where might Bitcoin be headed from here, where might altcoins in general be headed from here. Too many people are just focusing on the right altcoin. They're wondering what kind of altcoin should I buy? But it doesn't really matter when all of the market is crashing. Have a look at the titles of the premium update videos on this channel in the last month. I'm waiting for the market to cool off more. I'm waiting for Bitcoin to get closer to the 120-day simple moving average. I'm not buying Bitcoin until we drop further. And recently, 2 days ago, I published a premium video on how I'm looking for opportunities to bet on falling prices. Really, doesn't matter that much what altcoin you hold over here, right? If it's Dogecoin or if it's Filecoin or Arbitrum, it's all down. The macro is more important than the micro. And so what did I mean over here with this 120-day simple moving average? I talked about this several times on this channel. I made a back test to figure out what's the best measure to buy and sell Bitcoin. When we back test various moving averages over various time frames, we find out that the 120-day simple moving average historically worked the best and has been a very, very good indicator that I actively used for trading in the last years. And again, we are not yet in a bear market. We are still within our trading range. We are at the bottom of that trading range and we are above the 120-day SMA. So short term, this might be an entry opportunity. However, once we fall below that SMA, which currently is at 88,250 and which is still slightly going up. If we close a day below that simple moving average, then I will have a net delta negative portfolio. Or in simple words, I will have a portfolio that will make money when the market continues to go down, because I believe at that point in time, we will rather see falling prices than rising prices. But so far, we aren't yet there. Entering a few opportunities here and there makes sense, but having the entire portfolio be betting on falling prices, for that, I believe it's still a bit too early. But yeah, just have a look at this, for example, right? This is Balancer relative to Ethereum. Who doesn't want to bet on falling prices on an asset like this, right? right? The inflation of this token is very high. The tokenomics are absolutely terrible. There's more and more tokens hitting the market through incentives, and the demand doesn't really keep up with that supply. Now, of course, a balancer can go up in US dollars when all of crypto is going up, but relative to Ethereum or relative to Bitcoin, it tends to underperform very, very consistently, and we can bet on relative valuations. So you don't have to bet on the US dollar valuation of an altcoin going down. You can bet on the relative valuation, as in this chart, to continue to go down. Or check this out. This is the Dogecoin relative to Bitcoin chart. I made some very bearish videos on Dogecoin when we peaked over here, and I did get some very nasty comments under that video, and I will make a follow-up video rubbing this into those people's faces. But yes, it's really not rocket science, right? Sometimes these meme coins get pushed because Elon Musk talks about it again, and then sometimes the long-term holders take profit and the attention goes down, and that's then when relative valuations go down. Have a look at this, right? This is Arbitrum relative to Bitcoin. Again, terrible tokenomics. The supply is increasing over time, and it's really rather a science than an art to find those kind of tokens, right? It's just studying the tokenomics. It's just figuring out how to set up those different relative valuation short plays, right? How to make money when those altcoins do worse than Bitcoin. And that's why I made tutorials for that, also in premium. There's more than 100 tutorial videos in total in premium. It's not just about shorting altcoins, right? It's also about wallet tracking. It's also about risk management, very, very important. It's also about on-chain analytics. So feel free to check it out. It's currently $165 US per month. Yes, this might sound steep for some people, but compared to the potential losses that you make if you don't swap your portfolio during bearish times, it's probably just a drop in the bucket. There's also a 1-week money back guarantee. So in case you don't like premium, then feel free to simply just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. If you got some value out of this video, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.